Well, let's take a look at shares of AMD because they are down more than 10% this morning, despite what was at least a beat in terms of what analysts expected for profits from the company. It did miss estimates in that key data center segment. Christina Partsinevelos is here. She can sort of break down the numbers for us and the street reaction. Christina.
There was also growth that was pretty muted for the first half of 2025, and why Oppenheimer says the second half of this year will really be under scrutiny, and AMD is, quote, now clearly a show-me story. Bernstein, JP Morgan, Rosenblatt, all examples of companies that at least dropped their price targets by $25. HSBC betting shares are going to fall to $110. Wedbush argues the data center GPU miss, David, that you mentioned already in Q4 was not really in the cards, which is why you're seeing the stock sell off a lot more today, 10%. While Morgan Stanley, quote, says the sense is that the MI350 helps modestly, so that's AMD's AI GPU, but the real potential inflection point is likely the MI400 in mid-2026. In other words, a ways away. Investors were pretty negative going into this earning print, with shares down over 38% just over the last year, underperforming the stocks chip ETF, which is a great barometer. That's up 8% during the same time frame. Qualcomm, got to switch gears on the other hand. That company is up over 19% over the last year, and their earnings are out over the bell. Three main areas of focus for this particular name. First, you got smartphones. The company is winning with Androids, landing 100% of Samsung's new phone chips, which is up from just partial share before, although they are losing Apple as a customer in the near term. The second focus is auto and IoT, where peers like onsemi, Texas Instruments, NXPI reported weakness. And then finally, AI. Recent advances in efficient AI models like DeepSeek suggest sophisticated AI can actually run on less powerful chips, which could potentially accelerate edge computing adoption, which is really where Qualcomm excels. That's the edge is the laptop or our phones. Lastly, ARM earnings. They make money by licensing chip designs to companies like Qualcomm, for example, and over 50% of the revenue stems from smartphones. And the royalty rates are actually moving higher, which means more revenue. And the data center segment seems ripe for growth as its customer base for its IP licenses expands. So they're able to benefit from that AI push, and why the stock is running up over 2.5% into earnings today, David.
Yeah, interesting to see that. And its a market cap at this point is actually exceeding that of AMD's, I think, neck and neck.